Across the United States, countless individuals look for multifamily properties for sale USA that represent both stable housing options and consistent rental demand. In growing metropolitan areas, these multifamily buildings play a vital role in shaping neighborhoods, supporting local economies, and offering diverse living spaces that adapt to modern lifestyles. On Real Estate Capital and Growth USA, this video takes a closer look at how various American regions define and influence the evolving landscape of multifamily real estate investment opportunities. The focus is purely educational, highlighting factual market dynamics and broad geographic observations that shape current availability trends. Before we dive into deeper market analysis, let's take a brief moment to clarify that this content is for general informational and educational purposes only. It is not intended as financial, legal, or investment advice of any kind. As we move forward, we'll begin by exploring how the broader U.S. real estate environment sets the foundation for understanding the multifamily property market in greater detail. Overview of U.S. real estate investing landscape. Across the United States, the multifamily properties for sale USA market showcases remarkable regional diversity, shaped by population growth, lifestyle shifts, and evolving housing preferences. From the Atlantic coast to the Pacific states, multifamily developments continue to serve as vital components of urban and suburban living. These properties not only support housing demand, but also reflect the ongoing transformation of American cities into more connected, flexible, and sustainable communities. While the nation's real estate landscape remains broad and dynamic, certain regions consistently demonstrate patterns of long-term interest and development. Understanding how these geographic factors interact is key to seeing the larger picture of multifamily housing availability. Now, let's explore the broad patterns that define the U.S. multifamily real estate environment and how these trends manifest across different parts of the country. Urban and suburban market overview. In major cities such as Atlanta, Denver, and Phoenix, steady demand for multifamily properties for sale USA highlights how population movement and economic diversification continue to reshape the real estate landscape. Metropolitan centers offer dense employment zones and strong transportation networks, creating consistent housing needs for professionals and families alike. Meanwhile, suburban markets surrounding these cities have witnessed renewed activity as Americans search for larger living spaces, green surroundings, and community-based environments. These shifts reveal how the U.S. housing market balances the fast pace of city life with the steady appeal of suburban comfort. The coexistence of both environments contributes to the overall health of the national multifamily sector. Geographic and economic influences. The geography of the United States plays a subtle yet defining role in shaping access to multifamily housing. Coastal regions such as California and Florida maintain continuous interest due to tourism, business hubs, and climate appeal, while inland areas like Tennessee and Missouri attract populations seeking affordability and central access. The Midwest and Mountain West areas have evolved as practical choices for long-term renters looking for cost-effective and well-connected living environments. Economic drivers such as employment diversity, local development projects, and migration flows influence how new multifamily buildings emerge across these zones. These geographic and demographic patterns create a balanced mix of availability across states, illustrating why location remains a central factor in national housing analysis. National trends and evolving demand. Across the nation, the multifamily properties for sale USA sector continues to reflect a deep connection between urban evolution and community growth. The rise of remote and hybrid work models has encouraged flexible housing trends, while emerging tech hubs and college towns have added new dimensions to multifamily demand. Major metropolitan areas remain active, yet smaller secondary cities, such as Raleigh, Boise, and San Antonio, are experiencing steady visibility on national property listings. These developments show that the U.S. multifamily landscape is not defined by a single type of city or demographic group, but by a mosaic of interconnected regional stories. Understanding this variety provides a broader perspective on how multifamily properties remain central to the country's long-term residential framework. Overall, the U.S. multifamily housing environment demonstrates how geography, urban design, and migration flows converge to shape modern residential living. Every region, east, west, north, and south, carries its own identity, contributing to a nationwide tapestry of diverse housing availability. This overview provides context for understanding how local economies, infrastructure, and demographics collectively define opportunities in multifamily development. The next segment will outline the measurable indicators and factual benchmarks that help describe why certain areas emerge as prime markets across the United States. Key indicators of prime markets. In the U.S. multifamily real estate market, identifying prime locations for multifamily properties for sale USA requires more than just a glance at price tags. Across the nation, investors and analysts examine demographic and economic patterns that shape long-term housing demand. Cities like Austin, Texas, Raleigh, North Carolina, and Nashville, Tennessee consistently emerge as growth hubs due to their dynamic job markets and sustained inward migration. These urban centers highlight how community expansion drives stable occupancy and resilience in the housing sector. Now, let's break down the three fundamental indicators that define sustainable multifamily markets across the United States. Population growth and migration patterns. Rapid population growth remains one of the clearest indicators of multifamily housing potential. Regions like Central Texas, the Research Triangle in North Carolina, and Tennessee's Metro Corridor have seen substantial migration inflows. Professionals moving to these areas seek access to employment opportunities, diverse amenities, and affordable living relative to coastal cities. This gradual migration increases rental demand and stabilizes property occupancy. The consistent arrival of new residents forms a solid demographic foundation for the multifamily sector to thrive over time. Employment expansion and economic diversification. Another defining element in prime real estate markets in the USA is employment diversification. Cities like Dallas, Denver, and Charlotte benefit from expanding tech, healthcare, and logistics sectors, creating durable income streams and supporting housing resilience. Unlike markets dependent on one industry, these metropolitan economies show consistent rental stability even amid broader economic adjustments. This diversification translates to long-term occupancy reliability and reinforces regional investment confidence without promoting speculation or short-term turnover. Housing supply and affordability balance. The final indicator shaping strong multifamily markets involves maintaining balance between housing supply and affordability. In metros such as Phoenix, Tampa, and Salt Lake City, steady construction aligns with population needs while preserving competitive rental pricing. When cities sustain this equilibrium, they avoid oversaturation and support consistent occupancy levels. This measured approach demonstrates how effective planning nurtures steady housing ecosystems that can adapt to demographic or economic shifts. When viewed together, population momentum, job diversity, and housing balance illustrate the structural strength of U.S. multifamily markets. Cities like Austin, Raleigh, Nashville, and Denver demonstrate how sustainable growth aligns with long-term community development rather than speculative cycles. This understanding helps audiences recognize the measurable indicators that separate temporary booms from consistent regional expansion. In the next section, we'll explore how these indicators translate into actionable frameworks for assessing future market resilience across the United States. Spotlight on southern U.S. regions. In the evolving landscape of multifamily properties for sale USA, the southern United States continues to draw attention as a region of sustained expansion and housing innovation. Cities across Texas and Florida are recognized for their adaptability, strong local economies, and consistent housing demand. Whether in Dallas, Houston, Austin, or Tampa, the South reflects a perfect balance between growth and livability. Its mix of diverse industries, demographic momentum, and infrastructure development creates steady community ecosystems that support multifamily real estate evolution over time. Let's now examine how economic diversity, infrastructure planning, and lifestyle appeal shape the South's most resilient multifamily markets. Economic diversity across the South. The southern U.S. stands out for its strong and diversified economic base. In Texas, for instance, multifamily housing markets thrive due to a blend of energy, technology, and healthcare sectors that sustain consistent employment opportunities. Austin's tech corridor, Houston's energy hub, and Dallas's logistics expansion each contribute to ongoing urban demand. These interlinked industries reduce regional vulnerability and create a stable environment for residential development. Economic variety ensures that housing growth follows steady, long-term demand rather than speculative trends. Infrastructure development and connectivity. Southern cities continue to invest heavily in transportation, green infrastructure, and urban planning to support housing expansion. Dallas-Fort Worth's commuter networks, Atlanta's transit revitalization, and Orlando's suburban infrastructure illustrate how mobility directly supports residential accessibility. These strategic investments not only enhance quality of life, but also stabilize multifamily property occupancy rates. The growing interconnectivity among major southern metros strengthens their long-term sustainability as attractive housing markets. Lifestyle appeal and demographic momentum. The southern lifestyle combines affordability, cultural diversity, and climate advantage. Florida's coastal metros such as Tampa, Fort Lauderdale, and Orlando attract professionals seeking warm climates and active communities. These regions balance strong tourism economies with permanent housing demand, allowing multifamily properties to remain consistently occupied. Furthermore, states like Georgia and North Carolina have seen population inflows from northern and western states, reinforcing the South's demographic appeal and ongoing housing activity. From Texas's economic resilience to Florida's coastal vitality, the southern U.S. embodies the balance between affordability, opportunity, and growth that defines strong multifamily markets. This region demonstrates how diversity in employment, infrastructure, and lifestyle contributes to consistent housing performance across decades. Understanding these dynamics helps audiences identify the sustainable factors that keep the southern housing sector active year-round. Up next, we'll explore how western and mountain states are redefining multifamily growth through innovation and adaptive urban design across the U.S. real estate spectrum. Midwest and Western U.S. highlights. Across the heartland and the western frontier of the United States, the landscape of multifamily properties for sale USA continues to evolve with resilience and innovation. From the industrial strength of the Midwest to the sustainability-driven cities of the West, these regions represent two distinct yet complementary paths in real estate development. In Chicago, Minneapolis, and Columbus, education, healthcare, and logistics sectors drive steady rental activity. Meanwhile, Arizona, Colorado, and Washington illustrate how environmental awareness and urban design shape modern multifamily living. Let's explore how the Midwest's stability and the West's innovation together define the broader narrative of multifamily housing across the nation. The steady pulse of the Midwest. The Midwest maintains a balanced housing rhythm built on consistency, community, and infrastructure. Chicago, as a central hub, continues to attract residents with strong employment in logistics and education. Columbus and Minneapolis also display healthy demand driven by universities and regional headquarters. The region's affordability and established transit systems contribute to its long-term housing equilibrium. While it may not expand at the speed of coastal markets, the Midwest often demonstrates dependable occupancy and sustainable returns in multifamily developments that reflect decades of urban continuity. The Western drive for innovation. In contrast, the Western U.S. embodies forward-looking urban transformation. Denver's energy-efficient complexes, Phoenix's adaptive housing projects, and Seattle's green-certified developments showcase how sustainability influences regional planning. The Western approach focuses on blending innovation with community well-being, where new construction aligns with environmental design standards. These cities attract diverse populations, professionals, young families, and digital workers, all contributing to evolving rental markets that support long-term housing stability. This mix of progress and practicality positions the West as a leader in next-generation multifamily real estate development. Regional balance and nationwide impact. Together, the Midwest and the West illustrate a broader equilibrium within the U.S. housing sector. The Midwest provides the foundation of reliability and affordability, while Western states drive experimentation and ecological awareness. Both contribute to a balanced national ecosystem for multifamily housing. Analysts often note that markets combining these attributes, steady population bases and forward-thinking planning, tend to remain resilient in times of economic adjustment. Understanding this dual dynamic allows for clearer recognition of how multifamily properties for sale USA reflect regional character rather than temporary trends. From the structured skylines of Chicago to the innovative energy of Denver and Seattle, the Midwest and Western regions reveal how diversity and adaptability define America's multifamily landscape. The combination of reliable urban infrastructure with sustainability-focused planning has allowed these areas to evolve without losing their regional identity. In the next section, we'll explore how market data, public listings, and research tools help organize this vast information landscape across the entire United States. Data sources and market tools. When exploring multifamily properties for sale USA, accurate and verifiable data is essential to understand the nation's complex housing trends. Across every U.S. region, from the industrial Midwest to the rapidly expanding West Coast, access to public databases and research platforms provides clarity about pricing, inventory, and community growth. These resources, built on publicly available data, allow anyone studying real estate markets to follow transparent trends and measure regional stability. They are not investment tools but educational resources that help interpret how America's multifamily housing ecosystem evolves over time. In the following sections, we'll examine the main categories of data and platforms shaping housing analytics across the United States, from open-access databases to government-backed research centers. Open real estate databases in the USA. Across the United States, national real estate databases aggregate millions of public records covering property types, transaction histories, and multifamily listings. These platforms display building profiles, price ranges, and location-based analytics that describe ongoing market behavior. For instance, some databases use satellite data and public deed records to track multifamily development density. This accessibility supports transparency and fosters understanding of supply trends. The value lies in interpreting these datasets to reveal long-term housing balance, not in predicting or guaranteeing financial outcomes. Housing research and government reports. Public housing research organizations and federal agencies provide detailed studies about population shifts, rental occupancy, and construction activity. Reports often include maps showing regional migration patterns or affordability indexes. In the real estate market data USA landscape, these institutions act as reliable sources that maintain open-access publications. They do not forecast personal profit; instead, they document the evolution of housing conditions, offering a factual view of supply and demand. Analysts and educators frequently reference these datasets to compare regional growth rates, lending insight into multifamily construction and neighborhood transformation. Market analytics platforms and interactive tools. Modern technology allows users to explore property markets through real-time dashboards and visualization software. Interactive mapping platforms combine demographic layers, rental rates, and construction permits, offering a visual interpretation of U.S. housing trends. These property research tools USA give context to community evolution by combining historical and live datasets. They help illustrate patterns of development but remain analytical, not advisory. In academic and media contexts, These platforms serve as bridges between open data and informed understanding of national housing systems. Understanding the tools that shape real estate market analysis USA means recognizing how information flows from public sources to educational platforms. By accessing open databases, research publications, and interactive analytics, individuals gain perspective on housing dynamics without the need for private consultation or restricted data access. This educational framework promotes informed observation of how multifamily properties evolve across American cities, from the data-rich Midwest to the rapidly transforming Western markets. It demonstrates how transparent information strengthens comprehension of long-term housing development trends. In the next section, we'll explore how these insights combine with local community data to create a holistic view of U.S. multifamily infrastructure and its social dynamics. In conclusion, across this overview, we explored regions shaping the multifamily real estate scene, from southern growth centers to evolving western and midwestern cities. Each area reflects different aspects of how the U.S. rental housing ecosystem continues to evolve. For ongoing updates and future analyses, subscribe to Real Estate Capital and Growth USA to stay informed about the most relevant developments in the real estate financing and property market landscape. Thank you for watching.